Hello, everyone, and welcome to the Your Mark on the World show. I'm your host, Devin Thorpe, and this episode is being produced for GoodCrowd.info. Our guest today is a real luminary in the securities investing world, especially with a focus on crowdfunding. Our guest is Dara Albright. Dara, welcome to the show.
Oh, thank you so much for having me, Devin.
Well, we're excited to have you. We appreciate you making time to do this. You know, I've been subscribed to your content for a long time, and when I got your latest newsletter talking about Reg A, or Reg A Plus, I was really intrigued and reached out to you immediately to get you on the show because I think this is such an important topic. But before we talk more about that, why don't you take just a minute and introduce yourself to the few people on the show who are maybe watching who may not know who you are. Of course, most in the crowdfunding world will know who you are, but introduce yourself, please.
Sure, thanks. So my name is Dara Albright. My background, I come from a very traditional, conventional Wall Street background. 22 years now on Wall Street in everything from institutional equity sales, retail sales, IPO execution, and really extensive work in especially in the marketing and of securities marketing and investor relations. And I basically have come out of a firm called Unterberg Tobin. Back in the day, they were most known for bringing very high-profile technology companies public, companies like Intel that they brought public in 1971. And I had the privilege of working for them in the 1990s when this little thing called the Internet was just emerging on the scene, and it was really changing not only the way that we communicate, the way we shop, but the way we invest. And it was really an honor to work at that point of time in Wall Street because it was still a time when small cap companies could go public and there was a flourishing small cap IPO market, and it was an opportunity to be part of that ecosystem to help the people's capital reach the innovation of the day. Unfortunately, that is really no longer the world that we live in anymore, and the markets became very institutionally driven and monopolized by high-frequency traders. And over the past about 4 years ago, I actually reconnected with an analyst that I had worked with at Unterberg, who was one of the earliest internet analysts on Wall Street, who said, what do you make of these new sort of venture markets or exchanges that are popping up to facilitate transactions in private securities for late-stage venture companies and pre-IPO companies? And as I started looking at it, I said, this is interesting, and this could really be the embryonic period of the next great era of prosperity. So I started following what was going on, and basically taking this message on the street of, why this, what happened to the small cap IPO? How could we sort of bring back that whole marketplace? And in 2011, when I saw that a bunch of bills had just actually passed the House Financial Services Committee that ended up what we now know is the Jobs Act, I wrote an article called "Bipartisanship Prevails for Job Creation," and in it I spoke glowingly of this concept called crowdfunding and how that will really democratize the investing process and level the playing field for not only smaller businesses but for smaller investors. And for that, it was at that point I actually sent that article to Congressman McHenry, who had introduced that bill. And he liked the article, agreed to headline the next event that I was putting together in January 2012, which really became the first time we actually introduced Wall Street to the concept of crowdfunding. And then from there, it's just been a whirlwind, really just, being involved in really, I think, educating all parts of the financial ecosystem, whether it's the issuers, the investors, or even the intermediaries and investment bankers, and really showing how everyone in the ecosystem could capitalize on what I believe we're witnessing now is really a revolution in the financial system.
Absolutely. Now, why do you think, and why do you get excited about Reg A? What excites you about that?
So, what I really found exciting about what we call Title III crowdfunding or unaccredited crowdfunding was the opportunity to bring these early stage companies or these growth opportunities to retail investors. And I recently, in the article that you read, I had a chart in there which really compares the Intel IPO versus the Alibaba IPO, and it really shows you just how broken our system is. And just to give you an idea, or your listeners an idea, the Intel IPO went public in 1971, small cap stock. It was a $50-some-odd million valuation. They raised, $8 million on their IPO. The investors that purchased Intel stock on its IPO day, and if they held it till around this time frame, they would have realized a 280,000% return. Now, if you compare that to Alibaba's IPO, that raises $25 billion on their IPO, $175 billion market cap. In order for Alibaba's IPO investors to realize that same return, Alibaba will need to be trading at a $480 trillion market capitalization, which is 6 times the GDP of every nation in this country, in the world, on this planet.
It'd have to be 6 times the size of the global economy.
Exactly.
Yeah.
Exactly.
So yeah, it's just crazy. So the system is absolutely broken. Tell people what Reg A Plus, this Title IV of the Jobs Act, does.
Sure. So what excites me about, first of all, what Reg A Plus is, it's really it's an abbreviated filing for companies to raise capital. It's an exemption that allows companies to raise capital, and we're not jumping through all of the regulatory hoops that you would if you were doing a traditional IPO. So that means it's much less expensive and cumbersome. So Reg A's been around for a very long time. It is one of the least frequently used exemptions. Basically, companies were able to use Reg A to raise up to $5 million in capital. Now according to the Jobs Act, basically increased that threshold to $50 million. The reason why most issuers were reluctant to use Reg A is because what you have to do when you're doing a Reg A is actually go state by state to get approval in each state that you want to offer the stock in. That's what's kind of known as blue sky laws.
And it's prohibitively expensive for most deals, right?
And time consuming as well. I mean, so you're talking about months. And that's why many issuers really chose the Reg D path, because Reg D is basically you don't have to go and you're preempted from blue sky, and also with Reg D it's one form. It's a Form D. So it's a lot less burdensome. And so with what the SEC had done in December 2013, when they were proposing the rules for Title IV, which governs the Reg A exemption, was they basically are hinted or suggested that it should be also preempted, blue sky preempted. And if it ends up where once the final rules come to pass, if it ends up that they actually exempt Reg A issuers from having to deal with blue sky, laws, well, then I think that's a game changer. I think that you're going to see a lot more issuers using this. I think you're going to see, especially in the biotech space, that you're going to see a lot more companies. I think you're going to see a lot more Wall Street firms and small cap underwriters getting behind this. So I think that there's a real chance. But what I think it's really important to understand about Reg A is that, or any of these Jobs Act exemptions or new financing structures that are emerging, while it's creating a new way for issuers to actually raise capital, sometimes it's not only that's only part of the problem. You know, sometimes even raising capital can even be the easy part. You know, what I think that we really have to make the entire financial community really understand is that the first step is raising the capital. The second step, you also want to make sure that you bring the crowd. So you want to bring the people's money. You want to bring retail investors back into the game. And I think the final step is you need to provide liquidity. And where the real problem I think we have is we need a really a venture market, a reputable, solid venture market that can support and really help small cap offerings like this flourish. That's what we are lacking right now, and that's I think is the main thing we need to fix.
Yeah. So Dara, will a Reg A offering as conceived under Title IV and the draft rules suggest, will that make a company public? Will it provide a path to being public, or is it just another private placement offering?
It will provide a path. It depends. So, and what it really depends upon is how many shareholders that you have. So, just like in any kind of, with Title III, they basically carved out what's called a 12. They basically carved out those shareholders. They won't count them on the cap table. Right. So, if you were doing, theoretically, once it's available, if you were doing a Title III crowdfunding offering and had raised $1 from 1 million different shareholders, well, those million shareholders wouldn't even count basically, it wouldn't be, once you get to a certain number of shareholders, companies must go public. Or they must file
start filing their annual reports, right?
And essentially be public. So that's 500 unaccredited shareholders, or a total of 2,000 shareholders. Now you could have, like I say, 1 million under Title III, won't matter. Now, not the case with Reg A. With Reg A, if you have 2,500 shareholders, well then you are a reporting company. Now, that is something that I think will be discussed, and once the final rules come out, we may see we may see that change. We may see in final rules come out where maybe they do carve out the Reg A investor and take them off the cap table.
I personally like the idea of a Reg A offering creating a small public company. But it doesn't become a very effective substitute for true crowdfunding, because it isn't startup money in that case so much as growth capital. But to your Intel example, it brings back today's Intels into the public market that way, and gives everyone an opportunity to participate in that growth in the structure of public company markets, which most of us understand pretty well.
Right.
So I like it that way, although I know there are a lot of people that would rather see it sort of be another private offering, and I kind of hope personally that's what we see Title III become, is that way to seed capitalize yourself without having to worry about the ramifications of becoming a public company. Well,
I think you might see both, actually. I mean, I think you might see some issuers using it, Reg A, and staying private, and I think you may see some maybe using it more as as their entrance into the public markets.
Yeah. Well, it should be exciting. When do you think the SEC is going to act on some of these remaining Jobs Act regulations that were due now years ago? You know, they were due 2 years ago. Title III, they issued draft rules in October of last year. Nothing. I know they put out a calendar statement that many have interpreted as meaning they won't do it until October. You and I know Sarah Hanks. She took a position recently that means nothing. They could issue the rules tomorrow. What's your take?
Yeah, I mean, it's the $1 million question, but I mean, if I look at it this way, we've seen Congressman McHenry come out and be very vocal about challenges that they have with Title III. And I think it's pretty clear that especially with a new a new Congress, new Senate, I think that we will likely see a kind of a redo of Title III. And if we do, and even just the discussion of potentially scrapping it and doing that over, if I were the SEC, or and it was my job to create the new final rules, am I really going to work so hard and put so much effort into something that is likely going to be thrown away, and I'm going to have to do all over again? So I don't know how incentivized they will be to, and I could be totally wrong. I just, from a psychological, perspective, I don't know how incentivized they would be to do something knowing that chances are they may have to do it all over again. Title IV, I'm a lot more optimistic about. I think that I think we will see something sooner rather than later in Title IV. I think they need to do something. I think that I think the problem is a lot of it is really education, and I think a lot of it is really getting the message out there to the people, and even letting people understand what this really means and how it how having because what all Reg A all this is, I look at it as all unaccredited crowdfunding really is just the rebirth of the retail investor. So, if you talk about it in those terms, I think it's so important that we create a really workable framework for unaccredited crowdfunding to allow the retail investor back into the game and, back to participating in growth opportunities, because, those companies are still around. Those 200,000%, returns, they're still out there. You just have to get them very, very early. You're not going to get them in the public markets.
And so the only people who have access to them are people who are, by definition, already rich. People who are not are systematically boxed out, perpetuating the problem between rich and poor. I realize this alone isn't a solution to income inequality in America, but it is a factor. It is a factor.
It's a big factor, and by having these dysfunctional markets, I mean, really, what we've done is we've created an environment where the public markets have become nothing more than an exit strategy for the financially privileged, and that we want to talk about the wealth disparity in this nation. I mean, this is a big part of it. It's not giving the masses the opportunity to have yield and growth once again in their portfolios.
Yeah. Well, Dara, it's been just a joy to have you. I appreciate you so much taking the time to be with us today, and wish you every success in the work you're doing. Tell people how they can get your newsletter learn events. We don't want to have anyone miss out.
Sure. Thank you so much for having me. This was great. Feel free to reach out to me anytime. Twitter handle is at To The Stoics. It's TOTHESTOICS, or daraalbright.com. And you can find me on LinkedIn as well. And look forward. I'm always happy to meet new folks and start new dialogues. So feel free to reach out anytime. And by the way, I am having an event save the date for anyone interested, February 26th in South Florida, if anyone wants to escape to the warmth, where we're really going to focus on Reg A and a lot of what we just talked about now.
Fantastic. Well, Dara, thank you very much for being there. I hope I see you in Florida.
Thanks so much.
All righty. Let's do some good.
Okay, thanks.